Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Josef Schachter, founder of the Schachter Energy Report online at SchachterEnergyReport.ca. He's speaking to us from Calgary. Welcome back to the show, Josef.
My pleasure. Good to be with you again, Jim.
Josef, what a shock after the Russian attack on Ukraine and the prices of oil and gasoline just skyrocketing. So you have some forecasts here, but how accurate can it be when bombs are falling?
I think that's the problem. We were $62 for WTI in December when, of course, they were surrounding and building up their troop placements around Ukraine. And then in late February, when the war started, the prices went up $100, and the high was a few days ago, and was $130 a barrel. We're about 106, 107 US today for WTI, and it's like, what's the noise coming out of Ukraine? Are they be using more weapons of mass destruction, cluster bombs or thermobaric bombs? How close they are to surrounding Kiev? The death toll, from horrible things like bombing hospitals in Mariupol. The market reacts to all the news that's coming out of that. And then, the market liked the fact that the U.S. government, Biden made the decision to stop all imports of oil, crude oil products, LNG, and coal from Russia. I didn't know they were importing coal from Russia. There's a lot of coal in the United States. And so that shocked me. And LNG, I think, is just to the New York harbor during the wintertime when things are tight. But the coal and the oil and oil products, mostly oil products, have been a regular phenomenon, 650,000 barrels a day kind of number. Cutting that off, I think, caused the spike to occur. He's then, announced that, I'm going to make overtures, maybe Iran, will accept the nuclear deal, which probably be a bastardized deal and allow them to bring on 1.3 to 1.5 million to offset the 4 million that could be lost from Russia production. And then, of course, now he's talking even to Maduro in Venezuela, and seeing if a deal can be done there. They could, over time, and this could be months or even a year, it may take them to bring on 1 million barrels or more. So he's looking for long-term solutions, but the oil that he's talking about is dirtier. It's despotic, countries, and he's not saying to the U.S. industry, hey guys, we need you. You've got the most ethical, and most, climate toughness in terms of, emissions of you in Canada are the best in the world, and have the best records and are implementing the best technologies going forward. Why don't you increase production? The U.S. produced 11.6 million barrels. At the high, they were 13. Could they get back to 13? Yeah, but you need two issues. One, the government saying, please go, and shareholders realizing security of supply is important versus the push right now on energy companies to increase dividends and stock buybacks. I think that's going to still occur, but less so than security of supply. And if the American government, made that very clear, I think companies would do the switch versus listening to stockholders or institutions that are pushing them to, give us the cash flow, don't put it in your business. The government needs to say, put it back in the business.
Canada is the most reliable source of energy for the U.S. Any chance that Biden would give permission for the XL pipeline to return to construction?
Well, we saw, the Premier Kenney mention in the, at the CREC conference in the States, that he hopes that is the case, but Biden seems to be, supporting his, left of center members of the Democratic Party that don't want any of these things to go ahead. And so, what I'm shocked by is if he does do the Iranian deal, if he loses the Congress in November, then the Congress can overrule and say no deal. So, or it may take until 24 if the Democrats get defeated. Then that the Iran deal goes out the door. So, I don't understand the logic of dealing with despots and oil that is much dirtier than the U.S. You saw Premier Kenney say that there's a lot of infrastructure and things built already, and to move it forward, maybe it won't be with TransCanada or TC Energy, but it might be with other parties who buy what the residuals that are there and then use it to go forward. And he mentioned, of course, that the province of Alberta would be willing to support if it needed government funding, because they see the benefit of having that come on board for the long-term growth of the Western Canadian Basin.
With high gasoline prices across Canada, provincial governments are under pressure to drop taxes. I understand Premier Kenney in Alberta dropped the gasoline tax, and the very next day all the gasoline stations boosted the price by 2 cents more than the tax drop. Yeah,
it was. I think it's because of that punch up to $130 WTI. Now that we're 106, 107, I don't think we're going to see the price come down in the coming days. Refining margins are going to be pretty profitable for the the Suncors and the Imperial Oils and others that are in the business. So I think that it's just a shift from upstream to downstream. And I think we're going to be continuing to pay, 100 or 120, whatever it's costing you to fill your car. And people are saying, oh, it definitely makes more, attractive to own an EV. Problem is, you can't find EVs in the store, in the car shops. Anyway, all cars, are being sold above manufactured suggested prices because of the shortage. And I think with what we're seeing from, the issues with Russia, there's so many, things like neon that are needed to create semiconductor chips that, the input supply chain problems are just going to get worse. And, palladium, of course, is needed for catalytic converters, and Russia produces 40% of it. So you've just guaranteed that we're looking at more supply chain problems and a slow recovery, if at all, in 2022-23 from the auto industries around the world.
In this kind of situation, is this a good time to invest in energy? Everybody's saying, oh, oil's dead. Obviously, when you see the prices like this, oil is not dead.
No, the sector has done extremely well. It's done way better than I thought it would do, from our conversations. And I feel this is just like 2008. If you remember in Q2, the price of crude went from, under $100 to $147 because you had happy days are here, the economy is good, lack of supply, no new places for energy to come on from. And then, of course, we got hit by the financial crisis. And yet you look what's going on now. China's real estate industry is in trouble. The nickel, you saw the LME having to shut down because the hedgers, the commodity hedgers, the producers, were getting these massive margin calls, one Chinese entity, $6 billion US. And so we've got the same kind of breakdowns in the system as we saw in June, July of 2008. And I think we could see a very severe recession ahead of us. So while we're in the, let's say the last inning of the game for oil, I think people should be prudent in taking profits and going to the sidelines, because if I'm right and we do have a severe recession, we are going to see the price of crude oil bust 100 and probably bust 60. We have an official target that we think for Q3 of US $48 to $54 a barrel. If that happens, many stocks right now that are out there would probably have a 2-for-1 sale or more on the downside. So to grab the last little bit versus the downside risk, I think the risk-reward ratio is not in favor of investors at this point.
The prices we're paying at the pump would seem to indicate that there's a shortage of oil out there. Is there?
There is a current shortage. If you look at the EIA data, inventories came down again. Inventories in Europe are very, very low. Of course, Russia is still selling oil, but of course the difficulty of closing the transactions. Can you get a ship to move the oil from Russia to the buyer, and the insurance issues are there. So you only have like Russian and Chinese ships that are moving oil. Pipeline side is okay. It's just the shipping is a problem. And then on natural gas, the pipelines are still open, so the natural gas is getting to Europe. But the price there is, we're talking, in sub $5 in Canada and the States, and we're looking at, north of $100 equivalent U.S. For domestic prices in Europe. So it's companies like Vermilion are making out like bandits. They're doing really, really well. They're really the only Canadian company that has exposure to Europe, and the stock's been one of the most successful companies in terms of upside in late 2021 and through early, the first few months of 2022.
We'll have more with Josef Schachter right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Josef Schachter. Joseph, with an energy crisis looming in Europe and Canadians paying record high gasoline prices, does this improve the argument for Energy East? We got to get pipelines from Alberta and Saskatchewan into eastern Canada where the product can be refined and perhaps shipped to Europe, because I'm sure a lot of Europeans now are questioning their choice of selecting Russian gas and oil.
Yeah, logically it makes a lot of sense, but the problem is you have a province called Quebec, which is not really, seeing they number one, of course, it's their climate view, but number two, it's they don't see any economic benefit to themselves, so they can just say no, and that's the end of it. So unless the Canadian government, the leadership by Trudeau, can persuade the Quebec government that it's in their favor, there's jobs, there's business for them, and that they are, part of the solution, I don't think there's that Energy East has a probability of moving forward. I do think that there's more potential for the XL. TMX, of course, is going to move forward, maybe, and finish up early next year, and potentially that could be expanded. Maybe a route through northern Alberta into Alaska, is a possibility. But right now, we have excess capacity into the U.S. right now with Enbridge Line 3. And so oil can be moved from Western Canada down to the Gulf Coast, and there from shipping can be taken to Europe. And a lot of heavy oil is going down in Canada. The reason why we had that massive trade surplus is because of our energy exports to the United States. And that is, has been a very big positive for the country.
If Jean Charest became the Conservative leader and then perhaps Prime Minister, would that improve the arguments and the chances of a pipeline going through Quebec territory?
I wouldn't put much credence on that. Again, he's got the problem of Quebec is not going to take its instructions from Ottawa, and they have their own views that are separate. It just, being a Quebecer might help their chances of getting some more seats in Quebec. But again, if Charest takes the view of Western Canada on exports, he may not find as good a reception in Eastern Canada, Ontario, and Quebec. So it's a tough, juggling act that he's going to have to do to see how he can be supportive of the industry and at the same time not alienate his voters in Ontario and Quebec.
Joseph, can Canadians protect themselves from high energy prices now, or is it just something you got to bite the bullet and put up with it?
I think it's something we're going to have to survive for the next few months. I think that the data that's coming out on inflation, as you saw the U.S. CPI today, pushing 8%. 7.9% year over year. We're looking at, the NFIB, sentiment indicators for National Federation of Independent Business getting more and more bearish, getting down to 2020 low levels during the pandemic, and pushing and heading towards the 2008 lows. I think we're facing a severe recession. We know next week we're going to see an increase of 1/4 point from the Federal Reserve. The question is, what kind of tenor is his commentary? And if his commentary talks more hawkish about tightening up, I think people will start realizing a recession is coming, and that's how he fights inflation. And if we have a recession in the States, Europe definitely is going to be in recession, given the higher commodity prices and all the problems of logistics and supply chain and et cetera. And so, if we have a more worldwide recession, that could knock off 3 to 5 million barrels. In the 2008 financial crisis, demand was 88.5 million barrels in July, and it fell to 83 million in March of 2009. So 5.5 million barrels fell off. Historically, in recessions, 3 to 5 million come off. Well, that's the shortfall from Russia, 4 million barrels. So if we do see a recession, which I think is likely in the months ahead, then supply and demand would be in balance, and we'd start seeing a build in inventories, and that would then remove the war premium. Bank of America, I think last week, put out a report saying for every 1 million barrels of shortfall, that adds $20 U.S. to the price. So, of course, if we're looking at 3-4 million barrels as the shortfall, that's why we got up to that $130 a barrel. Again, if we do see that Balance Act come in with a recession, then you just take off, if it's 4 million barrels times 20, 80 off of 130, that's where you get that $50 handle. And we've been saying for a while, as I mentioned, 48 to 54 is our target for Q3 of this year, based on what we see as the recession and its impact on the cost. The question is for you and I, when we go buying gas for our cars, we will see the price come down, but we may see the R&M guys not let the price go down to where it may be, as they go from getting their profits in the upstream to driving profits in the downstream part of the business.
Joseph, thank you so much for chatting with us.
My pleasure as always, Jim.
My guest has been Josef Schachter, founder of the Schachter Energy Report, online at schachterenergyreport.ca. He was speaking to us from Calgary. If you have any questions for Joseph or any of our other guests, you can send them to info@howstreet.com, and we'll ask that question for you. Our YouTube channel is Talk Digital Network. Find us on Twitter at HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.